Hey, this is David Mariano, and you're listening to episode 73 of Finance Career Launch. Happy 4th of July. Happy Independence Day to everyone in the States. Stay tuned. This is going to be a special episode today. Hey, thanks for tuning in for this special episode. Before we get to the main section, I want to remind you that in addition to this podcast, you can get some other great finance career training and support by grabbing your free Finance Career Launch membership. If you're not yet a member, go ahead and register for no charge by visiting financecareerlaunch.com and clicking that big blue button. When you do that, you get instant access to the video series, The 7 Pillars of a Successful Career in Finance, along with some other great stuff. All right, as I mentioned, this is a special episode because I decided to rerun one of the most popular and useful, I think, episodes of this podcast. Episode 001, one of the first ones last fall with Bob Lauria, has been one of the more popular and one of the more useful episodes. So if you haven't heard it yet, this would be a great time to catch up on it. But I think people found it very useful for a variety of reasons. You know, Bob has a great story. He spent a lot of his career, most of his career as an investment banker, and has a variety of transaction experience. But he is one of the few people I know who has made the transition from the middle market to the bulge bracket. So he has a great story there. And I also think it's good timing to reshare this because we just finished that mini series of becoming an investment banker. So this will be a nice follow-up to those of you who have been paying attention to that. But Bob and I have a great conversation about the real story on the differences between the bulge bracket and the middle market. He also is in the the debt financing group right now. So we talk a lot about how an investment bank raises debt capital for a client. We talk a lot about the skills you need to be a successful banker, whether that's the balance of technical skills and communication, or even just how you can observe other people who are skilled at their jobs and then taking those experiences, those examples, and morphing it into your own style. And then we also talk a lot about why decisions made in the financial world are much simpler and usually less financially driven than you think. So please enjoy this conversation, this rebroadcast of my conversation with my friend Bob Lauria. Well, Bob, I'd love to get into a little bit about what you do now, but first, can we start off by going back to back to the beginning and tell us a little bit about your background and just kind of how you got to where you are now over the course of your career, kind of from undergrad to now.
I went to college undergrad, went into finance. I knew I wanted to do something in business. Wasn't 100% sure. You never really know. And so I started getting internships, freshman summer, worked at, a brokerage house, as assistant to a stockbroker, and then worked at Fidelity Investments in a couple different divisions, accounting division, fund division, real estate division. Then I got an internship at Goldman Sachs in their fixed income division. And, throughout all those jobs, internships, really kind of learned a little bit more about all the different types of, finance, if you will, all the types of jobs and what you can possibly do. And through that, experience, ended up and said, there's certain parts of each of these jobs I like and don't like. And, investment banking was the one that kind of fit the most of all the things I liked about all the different jobs. And so graduated, and shortly thereafter landed a job at KeyBank Capital Markets doing investment banking. And, from there, it was, kind of very much what I thought it would be. I enjoyed it very much. Did it for almost 5 years, and then went back to business school, did a 1-year program, and knowing that I wanted to go back into investment banking. So ended up doing that, worked at a few other banks, worked with a couple people I really enjoyed. Their careers morphed, my career morphed, and currently left the M&A side of the investment banking, and now I'm in the fixed income division doing small high yield and Reg D loans. So basically kind of raising debt for companies with EBITDA between, call it 10 and 100 million.
Okay, great. Back to your experience at Key, and then I know you went back to New York at some large firms. Not many people have the experience you do of going from a middle market, mid-sized firm to a large firm. Can you tell us a little bit about what that dynamic was like to make that switch?
Sure. And that was, you hit the nail on the head. That was kind of part of the reason going back to school is I had a few offers. I was promoted early at Key Bank, which was, middle market firm, and, looked to transition to a bigger shop in a bigger city. And, a lot of firms wanted me to take a step back in terms of career because, it was a middle market shop and a middle market experience. So that was part of the catalyst for going back to business school, and also part of the reason that I knew, a one-year program might be best for me. Because then what it allowed me to do is kind of get the MBA notch in the belt and enter on track with everybody else without losing, without potentially losing an opportunity of the extra year. And so when I got out of business school, went to New York, worked for Lehman Brothers, and the transition there was pretty easy. Doing the MBA and breaking it up, really kind of, I was not looked on as, oh, he's the guy who came from a middle market investment bank. I was just another fresh MBA. And what it allowed me to do is, the perception of when people looked at me was much different. So it was actually, a huge benefit for me because I was able to leverage all my experience of working in investment banking without being tainted as, working at a middle market shop. I was just an MBA, just like everybody else who had banking experience, and my work product showed that. So,
yeah, I'm happy to hear you say that too, because I get the question often, and even as recently as this week, of we're told in school, this is usually coming from a student, either undergrad or master's, we're told that it's really good to start with a big firm, but there's some benefits to being with a smaller company. But if you don't get the job with the big firm first, are you stuck? And I think you kind of show that you're really not stuck. You just might need to do some things to position yourself to, if you want to go big again, if you want to go to a large firm or large city, you might have to do a few things to kind of prop up your experience or your credentials.
Yeah, no, I definitely think, the key thing that you said there is, you have to, there's going to have to be some work, and that pretty specific, you really need to do some specific things to combat, the arguments that you're going to get and people's preconceptions and, the viewpoint that, people at bigger banks are almost always, because I think that bigger banks, if you're not here, then you're not anything. And so, you definitely will need to do some, additional work and pretty specific prep, whether that's professional prep or just prepping for interviews or making the right connection. So I definitely don't think you're stuck. I definitely do think that it is more challenging to go from a smaller to a bigger. But, if you're if you put in the right effort at the smaller shop, you can absolutely get, the argument that you'll get more responsibility and more experience is absolutely 100% accurate.
Yeah, and the other thing I want to caveat is, we're talking about investment banking. Other areas of finance may be different. All I know is my experience, and yours, so I can't really comment on other areas of finance that might be different than this too.
Yeah, no, I absolutely agree with that too. It's every industry and kind of every subsector within finance, whether it's, if you're in finance at a marketing company versus a finance in an accounting company versus finance in a real estate company, there's always going to be kind of the industry, you know, predispositions, and knowing, getting a handle for what those are and being able to position yourself appropriately is part of the trick.
Yeah. How about the work going from a middle market firm to I guess what was considered a bulge bracket firm at the time?
Yeah, I mean, I don't think there's really that much of a difference. I think the biggest difference is probably the amount, and especially at the junior levels. I mean, I worked a lot at KeyBank Capital Markets. Still put in the 80-hour weeks, but I think it can very quickly balloon to well over 100 at the big shops. And although the recent trends are people are looking to combat that, firms are looking to combat that and get away from it. So my experience may be a bit more dated than today's analyst experience, but I think what you do, I think the timelines you're given, the standards you're held to, I don't think vary very much. I think the easiest way to do it is if you do an analysis at a middle market shop for a middle market client, you may run 3 scenarios. And I think if you're at a bulge shop working for, a truly global, Fortune 25 company, you're going to have to run 15 scenarios. And that's just due to the sophistication. But, you can work with larger middle market entrepreneur businesses at a bulge bracket shop. You may only run 3 scenarios. So I think it can vary very much, and is definitely not something that you want to generalize.
Yeah, that's a fair characterization. Let's jump forward to kind of what you're doing now, which is the real interesting stuff. So dig in a little bit more. You said you're raising debt capital basically for companies from roughly 10 to 100 million of EBITDA. What is there are many different parts of the bank that participate in that. So can you help us understand kind of the different pieces and how your group fits into that?
Sure. So really my group is, the easiest way to explain it is my group has 3 sets of clients. So my first client is going to be the accounts. So these are credit funds, BDCs, basically anybody who's buying debt or private high yield. That's my first set of clients. That's the value add I bring, is being able to connect those people with the money to those people who need the money. So that's client 1. Client 2 would be the banker. So the industry groups within investment banking, it is their job to maintain client relationships and to sniff out opportunities. And should one of their clients need debt capital, it is their job to bring us to the table and bring that ability of the firm to their client. And so then, their client essentially gets handed off to us, and we run whatever the appropriate debt transaction is with, some assistance from the banking team, but, really we are running the show. So you have client number 2 is the banker. You need to get them comfortable, what they're doing, we know what we're doing, and get them comfortable that we're not going to damage their relationship with the company. And then our third client then becomes the company itself and management, and getting them comfortable with us that we know what we're doing, that they need to trust us just like they trust their banker who they've known for 5 years or 10 years and have done multiple transactions with. That's the third client. And so really balancing the needs and reassurances that each one of those clients needs can be tricky, but that's really where we sit. And that's how we interact with other parts of the firm, as well as kind of clients and kind of our value add to those clients.
Okay. And so as you're taking a client and a management team through that process, are you are you putting together marketing materials to then go to those credit funds and the other accounts that you have the relationships with?
Yep. So what we'll do is, it's call it a 30 or 40 page deck that outlines what the company does, what the need is for capital, and, going out to a debt investor and saying, here's the opportunity. Is this something that you'd like to do? Is this something that's interesting? And then bringing them into the fold, getting them in front of management, and kind of letting them do their due diligence, and then hopefully, you sit in the herd. Typically we'll go anywhere from 20 to 100 potential debt investors, and really kind of run a process and narrow the field down to the last one or two guys to raise the capital with who are actually going to write the check.
Okay. And do you find that it's different than the M&A process that you learned before?
It's actually very similar. Both myself and the global head of debt, who I've worked with, this is my third time working with my boss. I met him initially at Lehman Brothers, which is where I did exclusively sell-side M&A. So we actually run it almost identical to a sell-side process.
Okay.
And I think that's the differentiator. We don't sell it like a broadly syndicated bank loan where you do a bank meeting and you get 50 guys who all write, $2 million checks to raise $100 million. We run a process where if we're raising $100 million, we'll have 1 to 3 guys write checks, and that's it. We recently ran a transaction that was a $300 million deal. We had one guy write the whole check.
Okay.
So I think that's a big differentiator for why people like how we do things, and so it's absolutely similar to the M&A process.
Okay. And what kind of skills can you 2 or 3 skills that you can say that you brought over from that M&A process that you learned then, or you're learning now, even not that you had to learn them all before, that make you good at this job? What are the things that kind of make you that'll make you successful?
Yeah, I think interpretation and communication are kind of, I don't know if they're separate, or I kind of would consider them separate, because you need to be able to read what people are really telling you, and then, because you're asking questions of, person A to give answers to person B, and you're in between, right? And so you need to understand what the question is. What are they really getting at? Turn around, ask the question to the client, see what their answer is and what they're really saying, then turn back around and convey a message that is not only accurate, but presented in a way that's beneficial to the process and to the investor. And so I think, it is definitely, this is a shade of gray business, and wording and message delivery is kind of crucial, and I think that's something that we excel at. And so that's the biggest thing. And so delivering bad news and getting people to feel good about it is kind of, that's the ultimate goal, right? And so kind of working towards that is that concept is really what you're trying to do.
Okay.
And so I would say communication, interpretation, then, obviously the analytics is, and being able to look at data and pull out the good points of any set of data, I think is obviously critical. And then teamwork, because as I said, we sit in the middle of 3 different sets of, clients, if you will, all of which their interests may not always align, and being able to balance all of that for a good outcome that all 3 groups can feel good about.
All right. And on the communication interpretation side, is that something that you feel that you've learned over time, or is that something that you have training for? How do you acquire that skill?
Yeah, I mean, I really think it is interpretation. I mean, it's really, it's definitely just an experience and just seeing it and hearing it, because I think there is, there's very much, you have your own style, and no matter how much training you go through, you'll never be 100% just like the teacher, just because everybody is different. Everybody speaks differently, acts differently, has different thought processes. So I think what it really comes down to, you really need to be open and learn to be eclectic in kind of how you approach scenarios. And you need to realize that, hey, when I talk to this account, he's all business. He doesn't talk personal about anything at all, anytime. He doesn't even ask you how things are going. And you need to know that when you call him, that's the kind of delivery and that's the kind of conversation you're going to have. And then when you talk to this banker, he loves to talk about fishing, and you always spend 10 extra minutes on the phone talking about nothing related to the deal. And learning those nuances, you can't do that other than doing it and paying attention, and taking what works for other people and kind of morphing it into your own style. So I really think it's experiential and kind of just paying attention to things.
Yeah, and then adding in kind of your personality and your style, and being introspective, self-aware enough to kind of add on what will make your delivery, your style most effective too.
Yeah, and it's not about it's not about kind of following a checklist of here's what you do, here's what you say. It's this is what I'm trying to get done, and for me, what is the best way for me to get it done? And kind of that soft distinction. I think that's what really makes somebody go from kind of a junior banker to a senior banker. Is it's not just checking the box and, well, I know I'm supposed to say this, so I need to say it. It's, well, no, you're saying that for a reason, and if you can accomplish that reason another way, then you don't need to say whatever that was.
Yeah, that makes sense.
That makes sense. I don't know if that's 100% clear, but
yeah, no, I mean it's like you said, it's a gray. Everything's a little bit gray. It's more of an art than a prescriptive formula for what you do.
Yeah, I mean, you need to get the football across the goal line, and you have a set play. But if you get a broken play, the goal is still to get the football over the goal line.
Yeah.
And so,
if you look back over your career, is there anything that you've learned that's really surprised you? That you go in your early 20s and we're all energetic and ready to conquer the world, but now you've been in it for a while. If you look back, what kind of surprised you about the experiences you've been through?
I guess the simplicity of everything is, I mean, no matter how many, the great example is, we spoke earlier about, what's different in the work between a big shop and a little shop, and, three scenarios versus 15. At the end of the day, the drivers of people making decisions, whether it's a $10 billion decision or a $10 million decision, the same, 5 or 6 things are driving almost all decisions. It's what's good for me. It's what's my ego. It's what's my, understanding the person's viewpoint. And it really is as simple as you think. And that was very surprising. Especially, that's the biggest thing is how simple and straightforward some of, a lot of decisions and all these things that you think are so complicated and so much analysis. And at the end of the day, the CEO wants to do it because he wants to leave a legacy. And yeah, he does all the analysis so that he can justify it. But at the end of the day, he's going to do it anyways, because that's his personal legacy, that's his pride, that's his ego. And when you break it, when you push away all the noise, everything is pretty straightforward, and it's funny to just look back at that.
Yeah, and I don't know if you'd say it this way, but sometimes it's funny how non-financial all these financial projects and decisions really are.
Oh yeah, I mean, the stock market. I mean, the last 2 weeks the stock market has gone up and down and it's had 1,500 point swings intraday. Has any company changed, 10% in a day? No, there's not one company that, unless they file bankruptcy, there's no company that should move that much in a day if you're investing truly on, analytics and quantifiable, objective things. The subjectivity is the amount of subjectivity in quote unquote financial decisions is staggering.
Yeah, it is. It is. Okay. If you could kind of go back, look at yourself in your early 20s or whatever, you're coming out of school, coming out of an MBA program, either one, is there something that if you could go back and tell yourself, hey, develop this, look out for this, that you would want to tell yourself as a younger Bob?
I mean, there's, I was pretty happy. I got lucky a few times, but I don't think I could have done anything materially different to materially change, my level of happiness or my success or anything like that. I would say, definitely, probably the one thing I would tell myself is paying a little more attention and kind of getting a little more attention in college, actually. And, I was much more of a, hey, check the box. Hey, I studied for the test. I got the A. What else did I need to do? But I didn't really understand what I was learning. And, kind of it's the same principle of, understanding where you need to go and why you need to get there. And it's less about the how. It's more about just getting there and why you're getting there. And I guess I would tell give myself that speech.
Yeah. And figuring out that why in a lot of scenarios is hard. And I think, I don't know about you, sometimes I feel like you have to live through it almost to figure out that that's important.
Yep. No, absolutely. Absolutely. Yeah, I 100% agree with that. The only way you're going to learn certain things is by messing it up a couple times.
Yeah. And that's what when I receive a question like, hey, am I stuck if I don't get that job with the big firm? Part of my answer is almost, hey, even if you take what you might view or someone else told you as a step back, you just got to keep moving forward in a way, right?
Oh yeah.
Take what you get.
When you fall down, even if you fall down, just try to fall forward.
Yeah.
I mean, I don't think I don't know of any person, take anybody you want, any CEO of any, I don't think any of them are perfect and have never made a mistake at anything, no matter how smart they are or how much money or how many connections they had. You're going to make those mistakes, and the idea is to not make them twice and take something away from them.
Yeah, and you're probably going to be okay.
Exactly. That's that is some good advice that I actually did get when I was looking for a job. Is I know it feels like the most important decision in the world, but this isn't going to be your last job. And so, yes, you should think about it and take your time and be comfortable with your decision, but don't stress out so much about it that you don't make any decision, because guess what? It's not that big a deal. You're going to have you're going to get another job offer. There's going to be another opportunity, and so I agree with you on that.
Great. Just one more thing to wrap up. If you could point, again, looking back at your own career, just 2 or 3 things that you think you did really right that have set you up for where you are now.
Yeah. I mean, I actually think, going to the 1-year program at Babson versus the 2-year MBA at NYU or USC. I really think the one-year program for me at Babson was the absolute best decision. And at the time, I definitely felt good about it. I don't think I was as truly enthusiastic, I may have said it, but truly in my heart of hearts, as enthusiastic as I am now about the decision. And, it was one of those, hey, based on all my thought processes and people I've talked to, this is the right decision, and I'm going to do it. And, there's definitely a hesitation, but it was definitely a decision that was, I had my doubts about, but it had the fewest doubts out of any of the opportunities, and turned out to be absolutely 100% the greatest decision.
Do you think that's a great decision, was a great decision, because it was the 1-year program, or just getting your MBA, period?
I think multiple levels. I think the 1 year was absolutely the right decision. I had seeing people, there was very few investment banking or hardcore finance, investment banking, private equity people in my group. I think there's 3 of us. And, the level of what we got out of, what we got from a book learning perspective out of MBA was very small. But, definitely was able to round out a few things that I needed to round out. But also all the soft issues about Babson specifically were spot on. I mean, there was a majority of the students were all international, which, went to Boston College, went to work in Cleveland, not a huge, diverse international crowd. And so having that experience and seeing different perspectives and, hearing how other people in other parts of the world think about things was invaluable. And, that network of people even today is still hugely valuable to me. And, that was one of the reasons I ended up at Lehman. In all of Lehman Brothers in New York, whatever it was, 8,000 employees in New York or something, there was 2 other people who went to Babson. And they both, I ended up working for one of them, and the other one happened to be high up on the trading side. And, that was the connection. And so, just little things like that turned, just the coin happened to come up in my favor. And, so it was both the soft issues as well as the actual decision to go get the notch in the belt and, use that as a stepping stone to where I wanted to end up.
Hey there, I hope you enjoyed that conversation with Bob. If you hadn't heard it before, I'm sure you get a lot out of it. And if you had heard that before, hopefully listening to it the second or third time, whatever it was, that you heard some new things from it and can take that back to your career and do something with it. Like I said before, happy 4th to those of you in the U.S. Most people are probably off today. That's actually one of the reasons I reran this, is to lighten the load a little bit. But hope you have a good day no matter where you are, and I'll talk to you again soon.